So in today's video, I'm going to be going over the top 3 stocks to buy in the month of March. After doing a lot of research and going over hundreds of different stocks, these are the best 3 stocks to put your money into right now, in my opinion, especially after the big sell-off in the overall market. I believe some of these names are really undervalued with a big upside potential in the near future. So make sure you guys watch until the end of this video to get my full analysis. I'm going to be going over the important numbers that you need to focus on, technical analysis, fundamental analysis, recent news, as well as growth projections. But before we begin with this video, just a quick disclaimer, this is not a financial advice. Please do your own due diligence before investing your hard-earned money in any of these stocks. Now that we got that covered, let's get started with this video. All right, so the first stock on our list is ticker symbol AAPL, which is Apple. For those of you who are not familiar with Apple, I don't know what you're doing. Maybe you're living under the rock, but Apple is basically a big, massive multinational technology company that designs, develops, sells consumer electronics, computer software, and online services. They are considered to be one of the big 5 companies in the US. You know, they're famous for the iPhones, you guessed it, MacBook Pros, the iPads. They also sell a lot of different softwares on the App Store, iTunes. They have a lot of different revenue generating, services, the niches. But currently right now, Apple is trading around $121.26 with 52-week low of $53.15 and 52-week high of $145.09. If you look at their yearly performance, their yearly chart so far, you guys can see that it's been selling off ever since the beginning of 2021. It kind of picked back up and then again it sold off because of the overall market, meaning I think this is a really good time to buy into Apple when it's really undervalued. And that's exactly what I've been doing and taking this opportunity to just buy more of Apple shares. But getting into some more details, more numbers, Apple has over $2 trillion market cap. They have a PE ratio of 32.89 and earnings per share of $3.69. And their dividend yield is around 0.68% at the moment. Price to sales ratio of 7.38. Price to book ratio of 31.78, and their profit margin is pretty good at 21.74%. Their return equity is around 82.09%. As far as their balance sheet goes, currently they're sitting at $76.83 billion of cash, which is a really good sign. Current ratio is 1.16, meaning that they have 1.16 times their current assets as current liabilities. So now let's take a look at some of the analyst ratings. I don't always personally like to rely on analyst ratings because, in my opinion, analyst ratings change based on the current trend, the news, the price action. In my opinion, they kind of follow everything else. But it's always nice to get a new perspective from analyst ratings if they have a different perspective. So in a scale of 1 to 5, 1 being a strong buy and 5 being a sell, analyst ratings are giving Apple a rating of 2, meaning it is a buy, and the average analyst price target is $151.75, which is almost 25% higher than the current price of $121.26. At the end, I think it is safe to say that Apple is one of those companies with a good fundamentals, with really profitable company that produces really good products that people enjoy using, and they produce good returns year over year, over and over again. Just to bring some statistics, for example, in the last 10 years, Apple has produced annual average return of 43.5% per year, which is absolutely amazing, especially if you are a long-term value investor. Just putting your money in Apple and just parking your money, just buying and holding for the long term is going to be the best strategy in my opinion, especially if you're getting in at a really good price like it is right now because of the overall market selling off when the Apple is undervalued. All right, so enough of Apple. Let's move on to the next stock, the ticker symbol PLTR, Palantir Technologies. If you guys are not familiar with this company, Palantir Technologies is a software company that specializes in big data analytics. Right now, PLTR is trading around $23.90 with a 52-week low of $8.90 and 52-week high of $45. PLTR has a market cap of $44.88 billion. PE ratio and earnings per share is not yet available because PLTR is not yet profitable at the moment. They also have a price to sales ratio of 21.42, price to book ratio of 29.48. Like I said, PLTR is not yet profitable at the moment, and I think this is one of their biggest weaknesses. But as far as their profit margin, right now it is at negative 106.75%, and they have a return on equity of negative 139.76%. As far as their balance sheet goes, they have a total cash of $2 billion. They have a current ratio of 3.74, which is great because that means that they have a 3.74 times more assets as the liabilities. I think this is a really good sign overall. As far as the analyst rating goes, currently PLTR has an analyst rating of 3.4, which is in between hold and underperforms. As I said, I don't usually like to rely on analysts so much, but I think it is a good perspective to see. But I think the reason why it is in between hold and underperforms is because of the current condition of the overall company right now, because of a lot of the political issues that they have. But don't let that discourage you. I will explain a little bit more on that later. Just keep on watching. Their average analyst rating is around $25.83, which is still 8% higher than the current price of $23.90. Overall, they don't have the best analyst ratings, but don't let that fool you. If you take a look at the yearly chart right now, you can see that PLTR went public around at the end of September 2020, so pretty recent. And ever since then, as you guys can see, it has been making higher highs and rising pretty rapidly, in my opinion. It consolidated from December 2020 to February 2021, and then it made a new all-time high of around $45, and then it kind of died out. But now, as you guys can see, it is at a major demand zone, and it looks like PLTR pretty much bottomed out at this moment. And the reason for this major sell-off was due to the current market conditions. If you guys been following the market, you guys can see that the NASDAQ, the S&P 500, pretty much everything, especially tech companies, the NASDAQ, the QQQ, has been selling off pretty rapidly. And a lot of the names, because of this, have been going down, which means this is a really perfect time to buy into these undervalued stocks. So just to give you guys more sentiment of where this stock is sitting at right now, Palantir has strong history of institutional support. They have secured $91 million contract with the US Army, $36 million deal with the National Institute of Health, NIH, and worth up to $92 million contracts with ICE. They also have partnership with aerospace companies. They renewed their $300 million contract earlier this year, which is again really good bullish news. Back in the March 2019, data analytics company called Raytheon Technologies, RTX, had won a $800 million contract with the US Army. But now Palantir will be replacing the US Army's outdated system with their brand new comprehensive combat intelligence, hardware, and software suite. So again, this gives another bullish sentiment for this ticker symbol PLTR. PLTR's revenue also increased in the third quarter by 52% year over year, which is an absolutely good news. They also beat the analyst expectation by $10 million. Absolutely amazing news for the PLTR. They are getting more and more profits, more and more revenues as they're signing more contracts. At the end, in my opinion, PLTR will most likely only go higher from this point. Its growth is really impressive. Customers are massive institutions, and the total addressable market is pretty huge. They haven't even tapped into the whole market yet. Only thing that you should be mindful of is the political risks. Political risk could lead to a short-term volatility, but in the long term, this one has a lot of room, a lot of leg to run. So if you are a long-term investor, do your own due diligence, take a look at this company and come up with your own theses. But as of now, I am a long-term bullish on this ticker symbol PLTR. So moving on, the next stock, the third stock that we have is ticker symbol DIS, which is Disney. So if you guys don't know what Disney is a diversified multinational mass media and entertainment company. They have various business units, including divisions in television, broadcasting, streaming media, theme park resorts, consumer products, publishing, and international operations. They're also known for offering direct-to-consumer streaming services such as Disney Plus, Hulu, ESPN Plus, and Hotstar. They also have a group of 14 theme parks, resort hotels, and cruise lines around the world. A lot of these services that they offer has been taking a massive hit because of the pandemic. as we move on to better conditions because of the vaccine rolling out, I think this stock has a lot of room on the upside. So moving on to some of the key numbers. Right now, Disney is trading around $189.04 with 52-week low of $79.07 and 52-week high of $200.60. Disney has a market cap of $343 billion. The PE ratio is not yet available. Earnings per share is negative $2.74. Price to sales ratio of 5.63 and price to book ratio of 408. Profit margin of negative 8.15%, and the return on equity is negative 4.54%. As far as their balance sheet goes, currently they're sitting at 17 billion of cash and a current ratio of 1.31, which is pretty good because that means they have 1.31 times the current assets as the current liabilities. As far as the analyst rating goes, analysts are giving Disney a rating of 2, which means it is a buy. It is not a strong buy. It is still on both sides. The average analyst price target for this stock is $204, which is 8% higher than the current price of $189.04. If you take a look at the yearly chart right now, you can see that when the pandemic started, Disney declined drastically, but ever since then, it has been making higher highs and producing really consistent return every single month. And the big reason for this increase in the price of Disney right here, as you guys can see, was due to their streaming services like Disney Plus doing really well, way better than expected. Disney Plus now has more than 94.9 million subscribers, and Disney also claims that by 2024, their streaming services will have in between 230 million up to 260 million subscribers, which in my opinion is absolutely crazy. They can dominate the streaming industry altogether. But besides having a lot of bullish sentiment around their streaming services, they also have a lot of optimism when it comes to reopening up all of their theme parks really soon. At the moment, they have a total of 4 theme parks opened up. Hopefully with pandemic slowing down and vaccines rolling out, but more and more people get more comfortable traveling and going out for vacations, and hopefully we can see all of their theme parks opening up really soon, which will hopefully drive up the price of Disney. In conclusion, I believe Disney is overall a really good long-term buy. Just buy and hold for the long term, especially with the pandemic slowing down. I think we can see a lot of room on the upside. Just be mindful of the pandemic related news. That's the only negatives that I'm seeing right now. If there is anything that is major regarding the pandemic, that's the only thing that might affect the stock negatively. But other than that, if you are a long-term value investor, then I think this is a really good place to just park your money and hold for the long term. So with that being said, guys, that is pretty much it. These are my best 3 stocks to buy in the month of March. Whether you are a long-term investor or maybe a swing trader, I think these stocks present a lot of good opportunities in this month. Hopefully you guys enjoyed this video. If you guys did enjoy it, you guys know what to do. If you guys are new to the channel, subscribe down below, as well as smash that like button because it really helps the YouTube algorithm. But thank you so much again for your time. I hope you enjoyed this video. I will catch you guys all in the next video. Peace.